Hello to you all. Today I'm going to make educational course related with the financial markets, and I'm going to go into details explaining you everything that I consider is important, for to them. And I'm going to after that enter into the details of specific financial markets like stock market, forex, crypto, and so on. And slowly I'm going to continue with the educational videos for the psychology, risk management, trading strategy, technical analysis, fundamentals, kinda, I would say, everything that there is to be known in order to be used with the financial markets so you can make profits. So, yeah, let's start with the financial markets and what exactly are them. In general, we can refer broadly to any marketplace where the trading of securities occurs, like I said, stock market, bond market, forex, derivatives, cryptos, and so on. They are vital to the smooth operation of the capitalist economies. So to understand more, the financial markets, is that they play a vital role in facilitating the smooth operation of the capitalist economies by allocating resources and creating liquidity for businesses and entrepreneurs. So their main purpose, I would say, is that they make it easy for the buyers and sellers to trade their financial holding. So this that's why we come here by the law of the supply and demand. So let's say you want to buy some wood, well, you are going to find someone who's going to sell some wood. The same happen with the currencies, the same happen with stocks, and so on. So, like I said, they rely heavily on informational transparency to ensure that the markets set prices that are efficient and appropriate. So, like if I'm telling you that I'm going to sell 1 kilo of wood for $1, I'm not going to immediately after that put on a transaction that it's 1.5 or 2. If it's established to 1, you are going to buy it for 1. Unless, there is not enough liquidity and then the market is going to change, but that's another story. So, yeah. Also, like I said, these markets are made, they have to make easy for the buyers and sellers to trade their financial holdings. So in order to do that, they have to be sure that a buyer has the funds available in order to be able to buy that money. And if they don't have it, sometimes they can borrow it with some commissions. I will enter more into that in the future. We have different types of financial markets. So we have, for example, the stock market. I would say it's one of the most famous among them all, you know. And most of the companies here, it's where they list their shares and they are bought and sold by the traders and investors. So stock markets, or better said, equities markets, are used by companies to raise capital via an initial public offering, initially, and after that, these shares subsequently are traded among various buyers and sellers and what is known in a secondary market. So stocks, for example, they can be traded on listed exchanges like, for example, New York Stock Exchange or Nasdaq, or over the counter as well. And most of the trading in stocks is done via regulated exchanges, and they play a very important role in the economy as both as a gauge of the overall health in the economy, and as well as providing capital gains and dividend income to the investors, including those, for example, retirement accounts such like IRA or 401k plans. So yeah, what are the after that the over-the-counter market? So it's a decentralized market, meaning that it doesn't have a physical location, and all the trading is conducted electronically, in which market participant trade securities direct between two parties with a broker, without a broker. So while the OTC markets may handle trending in certain stocks, like for example smaller or riskier company that do not meet the initial criteria of the exchanges, most stock trading is done via exchanges. So yeah. After that, let's enter in another one which is familiar, because I'm not going to explain all of them. I'm going to explain the most important ones or most familiar ones. Let's go into the forex market as well. So in the case of the currency market, the forex market is the market in which participants can buy, sell, hedge, and speculate on the exchange rates between currency pairs. The forex market is the most liquid market in the world, as cash is the most liquid of assets. So the currency market handles multiple trillions, I would say between 5 to 10 trillions in daily transactions, which is more than the futures and equity market combined, as well as the OTC markets. The Forex market is also decentralized and consists of a global network of computers and brokers from around the world. The Forex market is made up of banks, commercial companies, central banks, investment management partners, firms, hedge funds, and of course retail Forex brokers and investors. Going to enter with another popular one. In this case, it's going to be the financial market of raw materials, aka the commodities. So here, those are venues where producers and consumers meet to exchange physical commodities such as agricultural products like corn, livestock, soybeans, energy products like oil, gas, precious metals like gold, silver, or soft commodities like cotton, coffee, sugar. These are known as spot commodity market, where physical goods are exchanged for money. At the same time, the bulk of trading in these commodities, however, takes place on derivative markets that utilize spot commodities as the underlying assets. Forwards, futures, and options on commodities are exchanged both over the counter and on listed exchanges, like for example the Chicago Mercantile Exchange and the Intercontinental Exchange. When I'm going to explain all of them in the details, I will put more details for it. And lastly, I would say my the one that I am mostly active these days is going to be the cryptocurrency market. So as you may notice, in the past several years, we've seen introduction and a big growth and rise of the cryptocurrencies, like for example Bitcoin and Ethereum, which are decentralized digital assets that are based on a blockchain technology. Today, we have hundreds, if not thousands, of tokens that are in, well, I would say hundreds of currencies, and or maybe I'm mistaken, because I would say most of them actually they are tokens. The difference between a token and and a coin, well, like for example BTC and AGH, they are coins. They have their own network, they have their own infrastructure. A token is made inside of a coin. Like for example, let's say USDT, Tether, for example, it's on the Ether, and so on. Like if we go on the coin market cap, like if we go here, we can see that if we go on the tokens, cryptocurrencies, here categories, yeah, many of those, like I would say more than half, they are tokens. But yeah, I'm not going to enter too much in detail right now about it. So yeah, like I said, they are available, both the coins and the tokens, to be traded globally across the patchwork of independent online crypto exchanges. So these exchanges host digital wallets for traders to swap one currency for another, or at the same time, for fiat monies like dollars and euros. This is the part of the trading. You have also part of the investment where you don't need an exchange, and you can save in your cold wallet, like your personal wallet. You can save those coins, and you can wait for the growth in value before you are going to resell them again. Anyway, because of the majority of these crypto exchange are in a centralized platforms, like for example Coinbase or Binance or Kraken, all of them they are centralized platforms. Users are susceptible to hacks and fraud. So yeah, they give you some benefits, but at the same time they have some very bad cons. Well, yeah. At the same time, of course, you can look for decentralized exchange where you don't need central authority, and these exchanges are known like P2P, like peer-to-peer trading of digital currencies. And here you wouldn't need an actual exchange or an authority to facilitate the transaction. And as well, I have to say that with the cryptocurrency, there are also futures and option trading available on the major cryptocurrency, like I would say BTC, ATH, and so on. So yeah, like this part, who are these financial markets? Like I said, whenever you do something, whenever you do commercial transaction inside, we can say that they are part of financial markets. Like even for example, when you buy something from the supermarket, or or something like that, at the same time that supermarket is buying these products from the farmers or from their own industry, and at the same time that industry, it might need some materials or something, and it buys it from somebody else. So all these transactions, they form part from the from the financial markets. Of course, there are bigger and smaller scales, but yeah, we are going to focus on the ones that are both for trading and for investing. So yeah, I hope I help you get a better idea about what are these financial markets, and see you soon on the next video, which is going to be regarding the stock market.